Good morning again and welcome to the Rick Helps Real Estate Show. We're going to dive in and see if there's any numbers that jump out that say, ooh, I should probably list now. Now keep in mind, I'm just going to share a few numbers because the market is definitely changing, but how fast is it changing? What numbers are we going to see that tell us that it's okay to wait or should we list now? And it all depends on your situation. I mean, if you're moving pretty soon, you got plans, then this is irrelevant. If you're looking and saying, well, should I list this summer or the fall? Some of this may be relevant. Some of it will jump out at you and say and help you make that decision. And some of it will be muddy. Welcome to the world of real estate. But before we get started, be sure and hit that like button. That helps a bunch. And 7-day moving average, check this out. So we've only got 5,800 homes on the market now, which is, again, slightly higher for a Monday. I think we got up to 6,100, 6,200 over the weekend. But you can see here the red line being number of homes under contract versus new listings that have come up. The gap is still growing, but you can see that number of homes that went under contract went up slightly. And that is, and I was expecting this today because now the Easter numbers are out. You know, Easter, we went down. And, under contracts, that's that big dip right here, Easter weekend. So I expected to get back up kind of to this territory. And price changes took a little bit of a dip, nothing major there. So kind of more of the same. And we are seeing that we're ending up with more. Hi, Mary. Good morning. We're ending up with more listings simply because the buying activity is starting to add down a little bit. Now, what's the effect on interest rates versus home sales? So the Mortgage News Daily kind of pulled up a chart here for us and shows some mortgage rates. Here's an opportunity where rates went up, spiked way up here, and sales dipped. This is 2016. Rates went up. Sales did not dip in 2016. Mortgage rates spiked up in 2018. This is what was famously known as the taper tantrum. Good morning, Jackie. And you can see that sales declined. Now we're in unknown territory, but look at the spike compared to other times in the market here. That the spike in interest rates now is not so much where the number is, but the velocity. And we can see sales going down. So how much more is it going to go down? So that's the what they call the $64,000 question. Nobody really knows for sure. So we want to go back and look at days on market. This is a bit of a busy chart, but it shows down here we're still at the lowest number, almost historically. We got down to 24 current days on market here last year, and now we're sitting at 26. Now, days on market is calculated a couple different ways. It's from the time the contract's written to the time it closes. So that usually runs about 30 to 45 days. But getting a mortgage and getting things closed now is actually happening a lot quicker. In some cases, if you've gone through the underwriting steps, you can get closed in 20 days. So that's one factor that drives down days on market. But we're not seeing an uptick there yet. And that'll be an indicator that it's taking longer to sell a home. So if you were thinking of selling a home later on, this one doesn't look like it's going to cause you any problems. Here's 2020, 44 days on market, 57 days. And again, that doesn't mean that your house had a for sale sign in front of it before an offer for 44 days. It means there's a difference between agent days on market and actual days on market. So days on market are that's how long it took to close. And Reed from Click-A-Pro, good morning. Love the graphs. Thanks. I got to go see what Click-A-Pro is all about. Now, here's one of the Cromford dashboards right here, and it's showing listing success rate of all the listings that come out, how many of them sold. Right now, it's 91.2%. It's green, so it's ebbing on the high side. So your odds of getting your listing sold are pretty good. The historic average is about 68.6. No alarm bells going off there. However, I do want to caution people, the worst thing that you can do when you're selling a home is doing something called test the market. Well, let's price it up here and see what happens. Well, in this market right now, if you're on the market like 8 days, people go, ooh, I wonder what's wrong. and then you lower your price, and they go, wow, they lowered their price. Sounds like they're willing to get even less, and they come in and they kind of lowball you a little bit. Not every time. I saw one this past, I don't know, I think it was around December, and they had this thing priced at, I think it was $475, and it sat there. Oddly enough, they lowered it by $20,000 to $455, and I'll be darned if people didn't bid it back up to $470. So it's a weird market. $475, nobody wanted to touch it, and nobody wanted to offer them anything lower than that. Once the homeowner finally said, well, you know what? Let's go ahead and drop it $20K and see what happens. Everybody goes, wow, this looks attractive. Bidding wars ensued. Boom, they're back up to $470. I don't get it. But that's what happens. So now here's the real kicker, and this is what you want to concentrate on. And you want to concentrate on this within your price range because it's all supply and demand, right? So here you are. Overall, listings under contract compared weekly is we're sitting at 10,697. Compare that to last year. There's more, or 2020, there's more homes going under contract by about 1,000 than 2020, and there's less than 2021. We had 12,000 go under contract. But let's do a little price filtering here. So let's say you're sitting in a home that's between 400 and 500,000. What does that look like? So 400 to 500,000, this chart's going to show you that there's considerably more going under contract this year than last year because that price point is very, very busy. 500 to 600,000, and let's see what that looks like. Again, that's way up. So that's a very active price point. Now, I'd go down to 300 to 400, but that's down because there just isn't anything out there. So you look at here, this is 2021, and now because of our price acceleration, that price point's drying up. Doesn't mean that those homes aren't selling. They're selling quite well when they come up. There's just not enough of them to pick from. If you are in the 600 to 800,000 range and you're thinking of selling, what do you see here? Well, activity's up 1,500 versus last year, 965. That's a pretty significant bit of activity. That's good news if you're thinking of selling right now. So that doesn't mean that you're going to be sitting on the market long. And you go 600 to 800,000, and you're going to see if it decides to cooperate here. Come on, you can do it. There we go. 1,573, almost identical. Now, let's go over a million to $1,500,000, because this has been a market that's been pretty brisk. And it's also been very scarce when it comes to listings. So we're right at 2021 levels, but then look what happened last year. Boom, it fell off. Okay, is that seasonality? I don't know, because when you look at 2020, it went up. So that's just a number to watch. It is rising. It's starting to dip a little bit right there. So not as many homes going under contract compared to 2 weeks ago. But we're still above or maintaining at 2021 levels. So those are decent indicators that you need to look at that says, can you show 700, 800? Yeah, I'll get right on that, Tyler. Bear with me a second here. So let's see. The only bracket I've got is between 600 and 800. So let's take a look there. And that one's showing 1573 versus 1169. So way more activity than last year, considerably more activity than 2020. So you're sitting there saying, well, should I put my house on the market? The answer is always, well, it depends. It depends on your situation. Now, I think I quoted my 16-year-old son back in 2006 when I was trying to determine whether or not I wanted to sell my home. And he wisely said, well, know what you know. In other words, you know you have equity now. You know the market's hot. Why don't we go ahead and sell it now, because we don't know what's coming later. Now, a lot of the Cromford data is showing, and it's a leading indicator, is showing that we are approaching on a graph getting to where a more balanced market, but we're still a long way off. Our Cromford Market Index is still in the 400s. And so for the next 3 weeks, we're really going to watch this and see how quickly this fall is going down. And if you feel like this is accelerating too fast and maybe we're approaching a more balanced market. Now I'm talking as a seller. As a buyer, you're foaming at the mouth. You can't wait for that to happen. But as a seller, if you find that's going a little too quick, then maybe you pull the trigger and put the house on the market. Why? Because you know what you know. We know where the situation is today. We know it's manageable. We know we're still having multiple offers, and we know prices are still going up. They're starting to go up at a slower rate this month than last month, but nothing alarming. Stephanie says, as relative increases in house supply increases compared to slower relative demand make house prices less inelastic. If this trend continues, compensating house price reductions could result. We're seeing price reductions now, and by price reductions, we're seeing the asking price that people are doing. You can see that we were up to about 1,200, I think, there, and so these are price reductions. If you compare them to last year, this flat line, they have gone up, but that's a really tiny number. They've gone up about 300 or 400 homes. So, and there goes my dog. Somebody's walking by and he wants to get attention. So they're getting a little more price reductions, but it doesn't mean that their house is worth less. I always want to stress that because we're not seeing that. It means test the market. I thought I could get this. Doesn't look like I'm getting attention. Let me pull it back. So they may have a house that between 2021 and 2022, it's appreciated at 25%, but they priced it at a 30 to 35% increase. Let's see what we can get. Let's test the market. So the people testing the market right now are having to pull back. Some of them are pulling back because they're seeing the news and they're getting worried. Boots on the ground is always your best indicator once you've listed the house. If you're not getting activity, it's obviously priced. Some sellers will say, well, you're not marketing it heavy enough. I don't think the pictures are good, this, that, and that. Hey, look, if it's a decent price, it's going to get demand. If you are priced too high, they're just going to ignore you. Tobias says, good morning, Rick. With interest rates being high and there not being enough inventory, I'm not selling, effectively adding to my problem. That's the big, saw a gentleman yesterday that says, he's waiting for his house to be built. He hasn't even got the permits in yet, and he's 50% through the process. He's worried about whether or not he can sell his house next year. There's a lot of people stuck in that spot right now, and a lot of people are sitting there like you saying, I like my interest rate. I mean, if I sell, and I got to refinance to go up to 5, I'm not sure I like that, except in the over 55 communities. We're seeing a little uptick in over 55. And the over 55 is people have a lot of equity and they're downsizing. So the higher rate isn't really affecting them that much when they get a lower house payment. So over 55, I think, is going to start seeing a bit of an uptick maybe this summer. Usually listings drop off like a rock in the summertime, but we may be facing a little bit different dynamic. So we just have to watch it. So I hope you can see that I certainly wouldn't ring the alarm bell to say that you have to sell now, but I also think maybe there's this comfort level that says you know what you know. So it's a personal decision for you whether or not you should list. Another interesting thing we got going on in our market here is Airbnbs. Look at Scottsdale. We have a total of, where is the stinking number here? It was sticking out to me, 5,878 active rentals. 38% of them on Airbnb, 27% on VRBO, and 39% are listed on both. Look at this. The average rent, daily rate, $317. That's $9,000 a month. They're saying the occupancy rate's about 71%, so they calculate it out to 4,239. But that's 5,800 homes that aren't on the market because they're short-term rentals. Where do I think that's going this year? Well, we have the Super Bowl in 2023. I don't expect to see anybody dumping their home prior to the Super Bowl. Another little fun ditty I showed up. I think this kind of explains the real estate market in general here. Let me get rid of my mug. It says multi-million-dollar realty corporations, national real estate market, and circled over here, people who want to buy a house to actually live in it. Airbnbs are definitely contributing to that shortage. Now, I had a question the other day on taxes, saying, taxes are going to come flying up. We're going to have an impact. And so this was kind of an interesting article. And to me, it really illustrates be careful what you're asking for from the government, because you never know the results. And in this article, famously, a tax levying on building windows in 17th century England was meant to lighten the tax burden on the poor, who generally had fewer windows in their homes. But it failed to consider the poor in cities who rented rooms in tenements with many windows. Landlords who were responsible for paying the tax defied it and boarded up windows. So I'm getting taxed on my windows, so I'm just going to put boards on them. And new buildings were built without sufficient windows. And on the 1845 Health Committee found the window tax aggravated typhus and smallpox epidemics and was the primary cause of much sickness and mortality. Oh, be careful what you ask for. You might just get it. Jerry says, I hardly hear anything about condition of house being a factor in a house sale anymore. Does low inventory mean people are buying despite big ticket fixes that need to be done? It's a house by house thing, Jerry. People are negotiating. I mean, it's rare to me to see that somebody's going to accept a house with a bad roof and a bad AC. Even in this market, people say, they had the inspection. Hey, that AC, I knew it was, 15 years old when I put the offer on the house, but it's not blowing cold air. They don't accept that. In some neighborhoods, you see a tile roof that looks great. We get it inspected and find out the paper underlayment is too dry. It's brittle. You're going to have a leak. People don't accept that either. So what they do is 9 times out of 10 accept a credit at close of escrow for a dollar amount that will let them hire their own people to fix the roof. Otherwise, you're going to face a major delay. You want the house, but you don't want the roof in that condition. The seller agrees that they'll fix it, but if they try to get a contractor now, they might not make it there for 2 months. So the easiest solution is for them to credit you some money at close of escrow so that you can fix the roof. So I don't believe the only people that are out there buying things in as-is condition are investors. And investors are looking for it. I get text messages every day, Rick, you got any junk? Got any junky houses that I can buy from you? My answer every week is no. So the worst condition that they can find, that's what they want. But the offer is going to reflect that, because if they offer you full retail, they aren't going to make a dime. So cash offer folks are loving this. Yeah, they are. But they're running out of distressed housing. So I don't see them. It's really hard to tell how that's going to shake out. There's a school of thought that says as interest rates go up, as we overbuy and overpopulate the single-family rental market, then investors will back off. Remains to be seen. If there's still appreciation, they're okay with lower rent so long as the house keeps going up in value. But if both of those things turn, what they can get for the rental and what they can get in equity start to turn, then it's a game changer. Airbnbs, that's a whole new phenomenon. We're just going to have to watch and see what happens on that. But I'll repeat myself. Super Bowl's coming out. And there were people getting $5,000 a week for their house the last time we had a Super Bowl here. And there weren't that many Airbnbs the last time we had a Super Bowl. And so it's going to be interesting to see as we watch the population in the Glendale area, if that's going to increase, because that's where the stadium is. So if I pop us over here and see what we're looking at in Glendale now, we're sitting at only 524 active rentals. Be an interesting number to watch this year, won't it? Are they going to pop up? Most people, when they come out for the Super Bowl, though, they kind of like hanging out in Scottsdale and partying and then driving out to Glendale for the game. And you also see a lot of activity in small jets going from the Scottsdale Air Park to the ball game. So I used to live in North Central Phoenix. Last time we had a Super Bowl, there was just one jet after another, just going back and forth, picking them up out at that airport like Litchfield and flying them back to Scottsdale, and a hell of a lot of helicopters. So Super Bowls are interesting and fun. Hope everybody found this enlightening and helps you with some decisions. I will be back on again tomorrow morning. See you then.